Okay, so I think we're just going to get started. Welcome to the first of two workshops happening today related to financial literacy as part of the larger Wellness Week at Mac event. We are holding this in collaboration with RBC, so we have our wonderful RBC folks here. And I think I'll just turn it over to them for a quick introduction on the session as well as who they are.
Perfect. Thank you so much, Brenda and Keshka, for having us. My name is Alexa Lucky, and I am an on-campus advisor at McMaster. We know we have not seen you in person for a very long time, but we're excited. Exams are coming. Some of you may be graduating, moving on to summer work and other opportunities. So we're so happy to be partnering with Jack.org and getting you through this stressful time with their Wellness Week. So yes, we will be touching on financial literacy. And today we're going to kind of go over building good student credit. So I will just introduce myself. Hopefully the screen wants to work. Okay, so perfect. Zoom always, we love and hate each other. So again, I'm a banking advisor. I'm on campus. Usually I'd be located in the David Braley Athletic Center. But however, of course, we've been shut down for a year now. I can't believe how fast yet slow that went. I've been with RBC for 5 years. I'm passionate about just helping students with anything that they're going through, any of those important milestones. I didn't graduate too long ago, so I can certainly relate to everything that you're going through, except for being a student in the pandemic. So that's a little different to me, but I know that everyone's kind of having some similar struggles and everything that they're going through. A fun fact about me, I always just bring it back to this one. I have a pug. I'm getting another pug. My pug is sleeping beside me right now. I hope she doesn't wake up, and she usually does wake up right in the middle of an event. So really hoping that doesn't happen. But yeah, I'm really excited to be here today. So I will pass it over to Kate to introduce herself as well.
Awesome. Yeah, my name's Kate. I'm a digital banking advisor at an on-campus as well, but I'm actually at the University of Guelph campus. So thank you so much, both to McMaster and to Alexa, for allowing me to get to participate in your wonderful event today. I've been with RBC for 4 years, and I'm very, very passionate about the early education piece. It is such a gift in my role to be able to talk to folks about credit, about planning, about getting financially savvy at an early age, especially when you're on that precipice of you're leaving high school, you're leaving mom and dad's house, you're about to go set off into the world. And sometimes we just need a little bit of extra support to kind of figure out the tips and tricks to make sure that you make the best of that opportunity. And then it's easy on you guys, and it's removes some stress, hopefully. You have enough to worry about with papers and finals. The last thing you need to be fretting about is how to use a credit card right or a budget. A fun fact about me is that I have been an improv comedian, so an improv comedy performer and teacher for 11 years, and I've been doing stand-up for 3.
Oh my gosh, that is super cool, Kate.
Thank you.
On that, we would have to put some fun jokes in next time. I love that. Probably why you're such a natural at doing events like these. So thanks for joining us. We have our University of Guelph campus advisor, Kate, with us today, and they'll be sharing some of the information that we talk about with their Jack.org chapter as well. So yeah, just getting out to all the students and making sure that they're feeling good during this time. And then later on in our other session, we'll introduce Rashmi. She'll come on. She's a banking advisor as well in Hamilton. She's newer to RBC, however, super passionate about the student experience as well. So if you make it to our tax and professional development session at 7:30 to 8:30, then you'll be able to meet her there. So yeah, we're really excited to be here today. What we're going to be talking about is defining credit, getting good credit, building credit, making those good habits with your credit. I know that for me, when we were planning the session, some of the things that we were talking about and picking Jack.org's brain, it's just growing up, they don't really teach you this stuff in school. For so many of you, you come to school, you're off on your own. Credit's such a big, vague word, and we really want to break that down for you, and have you stepping off on the right foot. I know for me, we were sharing our experience. I remember I got a pre-approved credit line, and Dan was saying that he had this too, and we're like, oh my God, we're rich. This is amazing. However, you do have to pay that back. So for anyone who's feeling in that same position with their student line of credit or their credit card even, we're going to kind of go deeper today into what you should be doing, what you should maybe be staying away from, just act as a bit of a dictionary for some of the terms that you may be hearing. So it'll be a pretty in-depth session, but hopefully you do leave with a few things that you've learned. So credit, what is credit? We hear this term, it's vague, it can be vague when you hear it all the time used in different senses. So let's just do a refresher for anyone, but credit is, in its simplest form, a way for you to borrow money. It's that ability to get something before actually putting your money towards it, paying for it on this promise that you will repay it in the future. So what I'm going to review is just who are those players. So you might have heard some of these terms before. I'll just put them up on the screen here, but the borrower really is that person receiving the money on that promise to pay it back. So that could be you as the student. So you're borrowing money, whether it's through your credit card, your student loans, anything like that. And you are promising that at some point in time you're paying that back. That's not free. It's not a grant or anything like that. So we'll go into that as well a bit later. On the other hand, you also have the lender. So that's that person or that company who's willing to lend out that money for goods and services in promise that they will get paid back later. So you might want to think of the borrower as you, and you're borrowing money from your friend for lunch, and then there is that friend of yours who's given that money to you. You forgot your wallet that day, and they know that in the future you're going to spot them back, whether you're paying them back or you're giving them lunch in return. So that is that reciprocal relationship there. And then the principal, so you might have heard this word before, but it's actually that initial amount that you have borrowed. So say that friend gave you $15, and this amount can be small or big. I'm just throwing that number out there. You will want to pay that back. Now, what are some factors that you might want to think about when someone borrows money from you? Everything comes up here. And you may have thought these things before as well. So if you give somebody that money, and you're talking about your friends here, is that a trustworthy friend? If I keep buying Kate lunch and she's not paying me back, I'm going to feel pretty uncomfortable in the future spotting her money. But if she's that friend who always pays that money back, oh, yep, absolutely, I'm going to get to you by Monday, you're going to feel more comfortable going to a friend like that. And you might even have these situations that you've even been in before. I know I definitely have. Will they have that money to pay you back in a reasonable time? I've definitely had a friend or somebody before that's like, oh, I'll get you back, I'll get you back. They never get you back. So that wouldn't be a reasonable amount of time. That's definitely something that banks think about as well. So when we're thinking about those big numbers, like your credit card limit or your line of credit limit for funding your school, you can see how that would be pretty risky if you are lending out that big of a sum of money and you have the chance to not get that back. So those are the questions that are important considerations for the lenders. So let's go through, we already went through the examples of that. So you might have heard the term principal before. Sometimes you'll hear the term interest. And really what that means is when those lenders charge interest, it means they're charging a premium for the risk of lending out their money. So it's typically that percentage amount on the amount borrowed. So that initial amount borrowed is the principal. And then on top of that, it's that percentage value that is kind of that premium that they are charging for the risk of their lending. And it compensates the lender for the risk of lending it out, because there always is that risk, and there's people out there who will not pay that back. So it kind of ensures that for them. The most important rule there is that everything that you borrow comes at a cost. It's never free. So you might think about this with your credit card, where you know that you have an interest rate maybe between 19% and 24%, and we'll go into what that entails for a credit card. But when you're hearing those numbers, you know that if you're not paying that on time, there's going to be that extra premium, that interest. So to keep your credit score in good standing, you must pay back that lender, whether it's a bank or a credit card company, a car dealership, anything like that, for when you're taking on more responsibilities now that you're a student, you're out on your own. Now, don't worry if you don't know what credit score is. We're definitely going to go into that later, and hopefully that helps a few of you out. But really getting down to it, just again, you must pay the principal. The amount borrowed is the principal plus the interest back. So this means that you could potentially pay more than what you borrowed. And that's the most important rule of credit. Making those payments, there could be more. So we can go over a statement to kind of show you what this might look like. So this is a statement from RBC. A lot of the banks will look the same as well. And again, if you have any questions in the future, regardless of who you bank with, please let us know. We're more of a financial wellness center on campus. We're able to be reached virtually as well. I know the campus shut down. So let's go through this. It's important to know how to read that credit card statement, so you're not missing due dates, you're not paying more than you have to in interest. The ideal thing to do is to pay your full balance off by the payment due date. So you can see that payment due date, that third circle there on the right. This one says July 27, 2009. So that's the payment due date, that time where you have to pay something by. Ideally, again, you're going to want to pay that full balance. So you'll see that new balance blurb is on the absolute other side on the left. That's your statement balance. So hopefully your credit card statement doesn't look like that, but we'll look at what happens when you don't pay that full amount as well. So what I usually say is, for students, we know that your first job is to be a student. However, some students have savings that they can put towards their expenditures. Some people have jobs. Some people have family that will giving them money and supporting them. When you make a purchase on your credit card, you want to make sure that either you can pay it off in full, or B, you have a plan to pay that down. So for example, I would always put my points on my my tuition. Oh, wow. My books is what I'm trying to say. My books on my credit card. Because I knew that it was a big expense for me. That was almost $1,000 or more every single semester for what I needed. So I had a plan that, okay, during the semester, I'm going to chip away at this much every time I had a part-time job. So every time I get paid, I'm going to chip a little bit away. So that by the end of the semester, I had that paid off. I had that plan. If you know that you're not going to be able to do that, and the plan, maybe it's an unexpected expense, your tire blew, or you had to, I don't know, like pay for more conferences or books than you needed, and it's not so sustainable, you need to make sure that you can at least make that minimum payment. So that one circled in the middle there. Really what that means is that you are paying off the minimum amount so it doesn't impact your credit. So you can improve your credit by paying off that new balance. Really, you're maintaining your credit when you're making that minimum payment. So if, you had your tire blew and, in 2-3 months down the road, you're going to be back working again, it's the summer, and you're going to chip away at it, at least make sure you're making that minimum payment, because that can really harm your credit for future things that you will do down the road. Now, if you decide to get a student loan or a student credit line, that works a little bit differently. So this is just a credit card statement here. While you're in school, for most banks, and you'll just want to double check with your advisor, you'll only have to pay off the interest. So your payments are quite low, not the principal and the interest, such as that new balance amount that you can see there. And then once you graduate, you will start paying them both back. So that principal and interest. So your payments will be higher. It's something to think about as you decide to either get a student loan or take money from your student loan or student line of credit. And if you have questions on this, please, again, reach out. Okay. Now, some questions that we have, just pulling away from credit for a minute here, is just what is the difference between debit and credit? I know that we hear these terms a lot, and so I just wanted to just rule this out because I do get a lot of questions. So what's the difference between debit and credit? So credit is, again, that money borrowed that we've talked about. So that could be with your credit card or your student line of credit. Whereas debit draws on money that you actually do have in your bank account. So most standard bank accounts will come with that debit card, or you may hear a client card or bank card, any of those terms. Physically, they look the exact same as a credit card, and they're used very similarly. When you shop, you can tap at the store whenever you're paying, but it takes money directly out of your account. So it's those funds that you actually already have, and that money will cover those purchases. Or else, imagine if you spent all the money in your account, it would just get declined. Like, you can't go usually past zero or past how much you have in your bank account. So just to recap, purchasing on credit or a credit card or something like that is buying something with money you're borrowing. Whereas debit is something that you're purchasing, it's the money that you have at that moment. And the factors that we are going to talk about that affect your credit, they won't come into play when you purchase with your debit card. So if you can't get a credit card or you don't want one just yet, sometimes, I know for me, I do a lot of online shopping. Like, I even just ordered this new mouse today. Great. And so really, if you want to buy something online, but you don't want that credit card, sometimes what banks will do is offer some sort of like virtual debit card, or it might be combined with their debit card that you can use to make purchases online directly from your actual bank account. So it's not exactly like a credit card. It mimics the ability to use it online, but it just comes directly from your account. So let's just move on here. If you do need to borrow, you do have choices. So going back to that credit conversation. So let's go over the three most prominent, I'd say, types of credit that you may have seen before and that are most popular in Canada. Again, remembering borrowing is never free. If you take one thing away from this today, you'll remember that. So we're going to talk a little bit more about the principal plus the interest. Now, before I get into these types, how do you know what kind of credit you need? This might be something that you've wondered in the past. You may still be wondering it. Like pretty much everything in life, it really depends. It depends on what you need it for, your personal circumstances. So we'll take a closer look at each. But of course, it is very important to, whatever you do choose, whatever will be appropriate for what your goal is, whether it's a car loan or student line of credit card, something like that. You really want to make sure that we're managing your debt responsibly. So if you do need help, ignoring that problem will definitely impact your future. There's no judgment when you do reach out to the bank. Please do reach out to your advisor, and we can help you set up that plan to manage your debt and get you back on track. I know sometimes when you don't have a job throughout the year, it can feel like you have lost control because you don't have that steady income coming in, but your advisor should be able to help you, whether you reach out to us just for a second advice or you reach out to your own advisor. We can definitely help you do that. So credit cards, that's the first one we'll go over here, and I'll just have everything up for us. So I'm going to touch a little bit on credit history, but Kate will go more into it in just a few slides. So building that credit history and getting that credit score early, sometimes we hear those terms, we're confused about what they might mean because they're used in a lot of different spaces and conversations, but we will give you more detail on that. So credit cards really help with smaller purchases or online purchases. Something that I would say is don't potentially buy something big like your tuition. Like you wouldn't put your tuition on this, it'd be more your books, or if you need to order something off of Amazon or your DoorDash or whatever that is, those smaller purchases. And we'll see why in a minute. Today, it's very common that you have online shopping sites that I know on my phone, I have a bunch on here between my my Apple Pay, where it just pays for things for me, or my Amazon or whatever that is. And it only takes credit cards. Now, when we hear the term secured, going to that second point, credit cards are not secured. And what that means is that you don't have to put collateral up to have that credit card. So for example, collateral could be something like a car to a car loan. So this doesn't have anything like that. There's no security that if you say had your car loan and you couldn't pay for it, the bank could potentially take that car to pay off the rest of the loan that you are owing. This is not like that, but it's a good term to know as well. Now, interest rates are usually pretty high. Now, there are types that you can get a low rate on, so maybe around 10%, but they can go anywhere up to 24% or even higher, depending on are you using your credit card. So you really want to be mindful of what you are putting on the credit card and making sure that you do have a plan, because that's going to be a lot of money. And then payments on your credit card are due monthly. So we went over that credit card statement. And it's important for you to keep track of the due dates just by checking the statements online. Maybe you're setting up alerts or doing automatic payments is what I suggest some of the students do. I did miss term there. So what term means is that, say like a car loan, you have a term of 5 years that you must pay that car loan off. Usually credit cards don't have this. However, sometimes international students may be restricted on how long they do have it based on their visa for being a student, but usually it doesn't really have a term on it. Smart way to avoid paying interest is by paying off that full balance, which we talked about before, and then you won't be charged any interest. And if you can only afford that minimum payment, again, at least just making that payment so you don't hurt your credit in the future. If you miss that payment altogether, sometimes what will happen is the bank will increase that interest rate. And it's usually until you are making those payments again, and then maybe the rate will go back down. But if you've seen that happen, let your advisor know and make a plan to get that sorted out. One thing I'll put out there is, and it's something that I get all the time, students come into the branch and they get out their credit card and they go to the ATM and they take out cash. This was something that I was doing probably every weekend for a straight year in university when I found out that you could get cash off a credit card. Not a good idea. I did learn. So what that is, yeah, I definitely did do that. I thought that it was super fun and it was like a good way to get cash. It's called a cash advance. So if anyone does hear that term, not a great thing to be doing. Basically what happens is, say I take $100 out. At that moment, I take $100 out. I am charged my full rate of interest every single day on that $100 until I have my entire balance paid off. So if this story is resonating with you and you need a plan to get that interest rate back down, pay off that credit card. So not all your cash flow is going towards paying off that credit card, please, again, reach out to something that your advisor can help with. Learn from my personal mistake. So next, another good point to make just with credit cards is that you may not know this, but often credit cards will come with some sort of perk, and they're really handy for whatever you want. So I know that a colleague of mine, when we were planning this event, was saying, you know, like movies are his favorite thing ever. So he had gone with a credit card that has points for movies. Now for me, I love having the ability to get reward points so I can transfer into it ever in the moment that I need, whether that's I need a blender or I want to pay back my credit card or I want to donate the cash. So definitely take some time if you have a credit card or you're planning to get one, just to find one that actually suits you and everything that's important to you. You don't necessarily have to go with one that has no perks, especially as a student. You're going to probably have some big things that go through, and you might as well take advantage of whatever suits your lifestyle, whether it's those rewards, the cash back, movies, whatever that is for you. Now for personal loans, this is a little bit different than a credit card. So that purpose is when you need to borrow money for a specific purpose. So my best example of this would be a car loan, but you might also know a student loan like OSAP or something like that. When I say secured, again, going back to your car would be used as collateral against the loan. So if you didn't pay it back, chances are they would take that car as collateral to pay off the loan. However, it doesn't always have to be this way. So for example, your OSAP, there's no collateral, there's no car involved or anything like that. So there's some loans that are secured and some that aren't. And then with interest, as discussed earlier, so we talk about the principal plus the interest payments from the beginning. So for example, you have that car loan, you were given maybe $10,000 every month or 2 weeks, you're paying down, say, $200 all the way down until you completely paid that off. So usually the interest rates are quite low. You pay it over a longer period of time. It could be 1 to 7 years, or sometimes even more, depending on what the purpose is. And then that would be the term. Faster you pay it back, less you're paying in interest, but you can create a plan for whatever the goal is that you're trying to achieve and paying that down. And then your banker would set up those automatic payments for you. So whether it's bi-weekly or monthly, I know for me, when I have something come out, I do it with my pay schedule. So as soon as I get paid, it gets taken off and it gets paid towards that debt. Now, the final one I'm going to talk about is a line of credit. So sometimes people might get confused with loan and line of credit. They are different. And so you'll get to see why in just a second. It's the most flexible way of borrowing for sure. So really it's different from a loan because you're not using all of that money at once to pay for something right away. So say when you get your OSAP, you're giving that money all at once, you're paying for your tuition. With something like a line of credit, you start with a limit, almost like a credit card. It's available to you when you need it, when it gets approved. You can withdraw when you need, you can pay it back. It's very flexible, almost like that credit card scenario where you're paying it back, putting money on it, purchasing things, paying it back. So it kind of stays like that for a while. So you use it when you need it. It can be secured. It doesn't always have to be. An example of this could be securing it to your home, but that would mostly be something that a homeowner would do. For a student, you wouldn't really maybe secure it. For the interest, again, they're usually low. You aren't charged any fees usually or any interest until you start using money from it. So say you got your line of credit today, but you're not starting school until September. Until you start paying your tuition in September, you're not paying anything for it, which is so nice. So you have that flexibility to use it whenever you need. And then the terms can be flexible. So you would want to talk to your bank. Again, I think that I mentioned before, but when you're a student, you can have preferred rates. You may have a grace period after school where you can still use this to start yourself up. And then you don't have to pay until a certain amount of years after you graduate. So definitely talk to your banker on that. And then for the payment, it's similar to the loan. You can make, it's usually a monthly payment. Just for the interest that you can make that feels more comfortable for you. So I know I went over a lot. Kate's about to boggle your brain as well, but I will pass it over to Kate to get more into what that credit bureau looks like.
Awesome. Thank you so much. So in this section, we're actually going to talk about getting credit. So you might be wondering after all that, why would somebody want access to credit? Well, there are a lot of reasons. Maybe you need to buy a car to commute to campus in the far future days when we're back to commuting to stuff. Or maybe you're getting ready to start your own business over the summer. Maybe there is a class you really want to take. I know I am absolutely going to be taking a pottery class as soon as it is safe to do so. Maybe you need to borrow a little money to make do some car repairs or even make rent on a particular month that just has been kind of a cluster storm of bad luck. It happens. I personally have helped folks go back to school with credit, achieve elective surgeries with credit, even purchase a concert quality sousaphone for a professional musician. So there are lots of reasons that you might be looking to get what we sometimes call good credit. I'm just going to pop over to the next slide. Having credit is really about, as goofy as it is to say, living your best life, mostly about having the opportunity to responsibly get the things that you want to own or the experiences you want to have or to invest in your future. Sometimes, in order to do those things, we do need access to credit. If and when those opportunities come, we want you to know how to access those things and use them responsibly. So I'm going to move to the next slide. Anytime you want to borrow money, these are the 5 things we're looking at. And inside of the bank, we sometimes call these the 5 C's of credit. We are looking at your character. That is, how responsible is this person when it comes to managing their finances and taking responsibility for the debts they already have? We look at your capital. That would be, okay, how much money do these people have available to them from savings or investments? Which sounds a little wild because you're like, well, if I had the money, why do I need credit? For lots of folks, money set aside in savings might be earmarked for something further in the future. Investments might be on a very specific plan, but it's nice for us to be able to take that into consideration. So, okay, worst comes to worst. Joe, whomever, could liquidate those savings that are really hoping to be used for the dream trip when he graduates. It's important for us to get a lay of the land in that way. 3 is capacity. Capacity is your ability to repay your debt. So between rent and your bills and your current debt, is it even responsible to saddle you with more? Do you have the capacity to take on a new thing? 4 is collateral, which are assets that you can provide as security for the loan, like Alexa mentioned earlier. So this could be real estate, could be investments, or it could be something like a car. It's something that is put up so that if you maybe weren't able to pay that loan back, your lender could recoup some of the costs that they've invested in you. And 5th is actually your credit history. And I think there's a reason that this is 5th. Your credit history or your credit report is essentially your track record for repaying loans and paying your bills on time. People often are surprised to hear that your cell phone bill rolls up to your credit report. Of the 5 factors, this can be the most important because it gives us a really good zoomed out look that can influence the other 4 things. So I'm going to scoot to the next slide, which is why is a credit report important? And that's because businesses want to know about you before they lend you money. The moment you start using any kind of credit, a credit report starts to get built in your name. And anytime you apply for credit, the lender, like myself, for instance, can actually access this report and see your credit history or your history of being able to pay your bills on time. It's a summary of things like your name, your address, and your social insurance number, and your previous couple of addresses. Your credit cards that might be floating around out there, your loans, including OSAP, how much money you owe on those facilities, and have you been paying those bills on time or late, and if late, how late? Think about it. Would you rather lend money to somebody who always pays their bills on time or who is always late? It's important information to have. They take a look at your report to learn about you and then decide if they want to lend you money or extend you a credit card. Another really important thing to note is that sometimes employers might also look at your credit report when you apply for a job, especially if the job you're applying for might put you in a position where you are handling large amounts of cash or dealing with people's personal information. They might have reservations about putting you in a bank teller position where you handle a lot of cash. If you are kind of in debt up to your eyeballs everywhere, they would have to measure that risk against things like your character or maybe your references. Cell phone companies and insurance companies are also parties that might be interested in taking a look at your credit report, as well as you may have heard sometimes landlords get a little bit curious about that stuff as well. I know rent is definitely my biggest bill. So your credit score is something that I think gets thrown around a lot. We say things like credit history and credit report and credit score, and it all gets sort of muddled around. So if your credit history is your financial reputation, it's the picture of how well you manage your money, whether you've paid your bills on time, what your outstanding debt is, have you ever missed a payment? Over time, this data forms a pattern of how well you pay or don't pay your debts. And anytime you're applying for a loan, for a credit card, those lenders are taking a look at that history to help them decide whether or not they should accept your application. As I said, landlords also might take a look at this just to confirm if you're the sort of person that they can trust to pay your rent on time. Your credit score is a number that helps sum up all of that detail. In simple words, it's a number that's assigned to you that shows your ability to borrow money and repay it. Higher the score, the better. In Canada, scores range from 300, which either means you are just getting started or you have maybe not been as responsible as you could have been, and it goes all the way up to 900. Why wouldn't it go from 100 to 600? I don't know. One of the great mysteries of life, but in Canada, it's from 300 to 900. According to TransUnion, which is one of the two extremely reputable credit institutions in Canada, 650 is the average score for most Canadians. And you'll notice on our little chart here, 650 right in the middle, 725, good, 790, excellent. And I only mention those numbers because I know you can check your credit score. We're going to go through the different ways that you might be able to get that information. But I have seen a lot that the color coding they use goes from like dark red to green, but that average score is like an off orange. I get a lot of folks coming to me and saying like, my credit score is 660, it's no good. And I was like, that's pretty good. That's pretty good. So to calculate an individual score, there's a very specific set of rules that are applied to a really intense algorithm, which draws some assumptions about your spending habits and then assigns you your number. Lenders might also use your score to help influence your interest rate and your credit limit, because if you have a high score, you might be able to get a lower interest on loans, which can save you a lot of money over time. A good credit score also helps you qualify a little more easily for loans. That can mean big savings for you, because if you're paying a lower interest and you have greater repayment flexibility than someone with a low credit score and a poorer credit history. I'm going to scoot to the next one. A good credit history and a strong credit score are super important. We talked about earlier about like living your best life. If and when the time comes for you to start making those really big purchases, like world travel, when we can do that again, or maybe a house, or maybe you want to combine those things. You're going to spend your money and turn a van into a sweet Winnebago camper van and become an influencer that travels the world in your van. I don't know. If you don't have the cash for that kind of stuff, you're probably going to need credit. And a good credit score is going to help you qualify for those loans and secure nice, low interest rates. Now, I mentioned looking at your credit report. You can actually request your free credit report once a year from Equifax and TransUnion. These are two national credit bureaus in Canada. They collect your information, they generate your report and your credit score. A big note of caution, don't trust other sites that claim to provide this information. Here in Canada, it's these two. Anyone else may not be trustworthy. And your credit report is free to receive every 12 months. And it's a pretty good idea to request that free report once a year just to make sure the information is true and accurate. No system is perfect. Every once in a while, there may be a mistake on there. You may share a name and a birth date with another Canadian, and some cell phone company out there has gotten you guys confused. And that other Kate was late on her cell phone bill, and now it's showing up on your report. It's great practice to once a year take a quick look. You want that information to reflect who you are, because creditors and, as we said, sometimes even employers can request this information. You can also just request your credit score, so not the full deep report, just your score from Equifax and TransUnion. Sometimes there may be a charge to this. If you do happen to be with RBC, I can say that you can check your credit score through our online banking, because we have a relationship with TransUnion that lets you do that. That you very well may be able to do that through your other institutions as well. It is definitely worth a check. And our next slide, oh, it's already on the screen, beautiful. You can see what our version of the screen looks like, because we needed something to show you an example. Odds are, if you do have access to this through your own institution, it's going to look kind of similar. So if you happen to be an RBC client, you're logging in, you're going under My Services, you're viewing your credit score. You can see here where it's broken down into both a number and these sort of colorful squares. This is where I mentioned you see only the top box is green. That yellow box is also very good, above average scores. What I really like with this, and I hope your institution maybe has it as well, is a score simulator. So you can actually go and play around with what would happen if you added a credit card or a loan, if you increase some limits. Gives you a bit of a sneak peek on how those things might affect your score, because those are all little pieces that can affect your score. In fact, we can look at the next slide and show all the bajillion things that makes up a credit score. The two most important, they make up the biggest pieces of the pie here, are your payment history, paying all your bills on time. Paying late or having your account sent to a collection agency has a pretty solid negative impact on your credit score. The other big piece is your credit utilization, which is sometimes called your balance to limit ratio. In other words, don't max out your credit card. Try and keep a month-to-month balance of less than 50% of your credit limit, because being right at the maximum limit of your credit card month after month can actually affect your score. If your credit limit is $1,000, a good rule of thumb is to try and keep a month-to-month balance of less than $500, or try and pay off your balance completely if you can. Other things that might affect your score include like new credit applications. How frequently are you applying for credit out there? You should really only be applying for credit that you really need, because too many inquiries in a really short period of time can be a flag for us as lenders as a sign of financial difficulty. It can also be seen as you might be overextending yourself by taking on more debt than you can likely repay. Credit variety, also a square. How balanced, or square, a triangle, piece of the pie, thinking of lemon squares. How balanced is your mix of credit? A really healthy credit profile is going to have a mix of credit accounts and loans, different types of credit. You know, you're not somebody who just has a dozen credit cards that are all maxed out. You know, maybe because you sat in on cool presentations like this one, that those bigger items like a car or your tuition probably don't belong on credit cards. So you've leveraged other kinds of credit to make that happen for yourself. You'll also see account history. So having a longer history on your credit account does earn you some more points. So If you have the choice between closing a card you just opened and one that you have been maintaining for several years, close the newbie. A good credit history is built over time. Too many accounts. That is also a concern. Having access to too much credit, like having multiple credit cards or multiple loans, can also be a warning sign for us that you might be in some financial distress, and it can make it more difficult to borrow money in the future. Even if you aren't using the credit card, a bank is going to look at the credit you have access to and evaluate your financial health that way. So if you've got a $1,000 card and you're like, I've never used it, well, you could. So I'm going to still take it into consideration on my application. So now that you know what credit is and what impacts your ability to get it, I just want to review some best practices around the actual usage of it. That is good credit habits. This is my favorite thing to talk about. So you heard me earlier kind of mention the word really casually, good debt or bad debt. Not all debt is created equal. Risk, interest rates, secure versus non-secure, poor credit scores. This kind of makes credit sound scary or bad, but as we've discussed, building good credit and practicing good credit habits or good credit hygiene is important when you need to access credit in the future. Good debt is an investment that will grow in value over time or generate long-term income. Good debt generally has lower interest rates. Taking out a student loan to pay for your education to get you that great job is a perfect example of good debt. Another example is taking out a loan to help start your own business so you have control over your career. And of course, buying property that's going to appreciate in value is good debt. Bad debt, represented here by a piece of, I guess, very delicious looking cheesecake, is debt incurred to purchase things that quickly lose their value and don't generate long-term income. Bad debt is also debt that carries higher interest rates, like credit card debt. Because bad debt is more expensive to borrow, it's especially important to pay it off on time. You know, credit cards are on there, and I would never tell you to never get a credit card. It can be really handy sometimes, but much like a delicious dessert, it's not something that I'm going to encourage you to have for every meal of every day, because you'd get sick. I would. Building good credit and building good habits. Right here, pay your bills on time, reduce your debts, correct any errors in your report, use your credit card to responsibly build credit, start early and be patient. Paying your bills on time, right? We live in 2021. If you ever have missed a bill payment, please go check in with your advisor. Odds are we can set that kind of stuff to automatic. Automatic bill payment is just about the best thing since sliced bread. Good credit behavior can take months or years to build your credit history and your score. So it's important to learn these necessities now. So thank you guys so much for hanging in there today and learning with us. And keep in mind, every time you apply for new credit, it's going to show up on that score. It's going to show up on that report. So we want to make sure that things we're doing are with intention and with good habits backing us up. So I want to thank you guys so much for your time today. If you have any questions about credit or anything else, you can feel free to book an appointment with myself if you happen to be a Guelph listener, or with one of our other wonderful speakers. We'd be happy to help. And I think we're hanging out to do a bit of a Q&A, Alexa, right?
Yes, if anyone does have a question, again, reach out to any of us. I know that we have another session tonight. So even if you have questions on that topic, we all understand the same topics, and we're definitely here to help. So between University of Guelph or McMaster, and Rashmi and I represent McMaster here, and Kate is with University of Guelph. I do have to do a bit of a tribute to our friend Dan, who should have been helping us tonight. He helped kind of prepare everything, and he works with Kate at University of Guelph. He has unfortunately been injured. He is okay, but just definitely a big thank you to him if he is listening in. So I don't know if anyone does have any questions, but if not, we can end off the event. And we thank you very much for taking this time. Hopefully you did figure out some things that you had on your mind, and maybe this brought on more questions, but I'll just wait a minute and then we will sign off if no questions.
Yeah, and please don't be nervous about emailing us. Answering questions and getting to talk to students is genuinely the best part of my job. So if you think of a question and you want to email me, my email is on the screen. It's not there just for decoration. Please feel welcome to use it. Same with that QR code. Add me on LinkedIn. I do want to talk about your network. I do want to introduce you to people in Guelph. I love it. I love it.
And same goes for us at McMaster. We truly do love our job. It looks like we do have no questions, but even for those who do watch the recorded version, again, please feel free to reach out. Perfect. Thanks, Anna. And for everyone who came today. So we will let you go. We will end this off. Enjoy the rest of your evening. And if you happen to catch us again at the 7:30 session, we will see you then.